Good afternoon, everyone, and welcome back. This is Daily Trade Analysis with the market recap for today, 5th of January. Today, we got ADP employment change and we got way higher employment than expected. We expected 150,000 and we got 235,000. So labor market remains strong, employment remains super high, way higher than expected, and that means that Feds will remain hawkish and probably continuing raising interest rates. More data, initial jobless claims, we got 204 and we were expecting higher than the previous one. So bad again, jobless, less jobless, initial and also continuing jobless claims way lower than expected. So this combined with the employment change shows us that the labor market and the jobless people are still strong. We are not getting the data that we want in order for Feds to trust that their measures are having an impact on the economy. Labor market remains strong. At 9:45, we got PMI composite and PMI services. We got a little bit of decrease in both, more or less as expected, but I think employment and jobless claims were bad. And I think that impacted the markets. So let's see how the market reacted on those. We got this. This is the moment in which ADP employment came out. And also at the open, then we got this rejection at high of day. This is the open. We started going lower pre-market and into the open, we just sold off and we crossed these two levels on the 30-minute chart that we were holding since a lot of time. I think 2 weeks almost. We are holding in the Nasdaq 10,800 and 10,700. So if we look at these levels, this is super interesting. We are holding these moves. So even though we are getting bad economic data, we are just holding this 10,800. We are super choppy. There's a clear compression and sideways consolidation in here, and in the S&Ps, it's even more clear on the daily. Look at this. Look at this range. We are just trading sideways, trying to hold 3,800 in the S&Ps, and in the Nasdaq, we are trying to hold 10,800. So as I was saying, we are holding these levels. So I draw a line, I draw several support at 10,800 and 10,700. The first one, we got it. But look at this. Look at the wicks. These wicks shows that selling pressure is strong, but the closures are not weak. I was hoping for a big candle, but the first one, look at this. First one, bought up. Second one, sold up. Sold down. Sold down, sold down, sold down. A lot of weeks, and now we are trying again. We are holding 10,837 in this case. So this is interesting. If you see that economic data is coming bad, and you see that the markets are holding, I think a lot of high time frame investors, big banks, and hedge funds are buying these sell-offs. They are buying this setup. And it's quite interesting because, yeah, I mean, it's quite clear we are not selling off. This was a hard rejection up here for the CPI, and we are just holding in this range. 11,000 was at that moment quite interesting, but right now we are holding. So watch out for that. Don't think that the market is so weak that it's going to sell off, because I'm being bearish this week. I've been selling short, but I didn't get what I expected sometimes. And this is something I've been watching throughout this week and also last week. Market is somehow strong. So let's see, because right now, look at this move. At 120, we got Fed Bullard speak. So Fed Bullard speech, And let me tell you that it's more of the same speech. The prospects for this inflation, he knows that GDP is improving, okay, economy is more strong than we initially thought. That's good because we are fighting inflation by basically destroying the economy. So having GDP and several signals of the economy remaining strong is somehow good for the long term, but don't get me wrong, we need inflation to come down and we need to destroy part of that strong economy in order to have a bullish future. So labor market remains strong. This is the focus, not only for me, but I think for all the investors and all the media, all the Feds, they are watching labor market. And labor market is something that is surprisingly super strong, not only on the unemployment, 3.7% still that level, but also for the jobless claims, way lower than expected, employment super high, payrolls super high, job openings still remain high. So a lot of employees, they have a lot of offers, so they can request more wages, higher wages, so they have a lot of money, and that increases inflation. So we need labor market to come down and to cool off. Bullar also says that inflation remains too high. It has declined recently, but according to yesterday's FOMC minute, Jerome Powell said that he's seeing stagnation, he's seeing halting signals. So even though we are way higher than the 2% target, some kind of data is good. So fluctuations in energy and food prices have declined, but I don't think they are happy with where inflation is right now. I mean, there's no way they are happy. Policy rate is closer to sufficiently restrictive, so this means that they are happy with this 4.75% that we are right now, and maybe with the 5% that we are going to hike in the next month, in February. Because right now, if we check the estimates, we are at 425, 450, and most probably we are going to hike at least, well, this is more or less 50-50, 60-40. 60% of analysts think that they are going to hike 25 basis points on the 1st of February, and 40% is 50 basis points. I think 50 is quite good because inflation is still super high and we are not seeing that, but this is a tricky situation because if we continue high-end 475, 5%, this is super high. I mean, 5% for 2023, this is super high. They think this is sufficiently restrictive in order for inflation to come down. That's good because the only thing that they have to do is not continue hiking, but remain at those levels. That's what Jerome Powell said yesterday. Well, we saw that FOMC members were saying, when agreeing on this, that they are going to remain in 2023 at those levels, and they are not going to cut any interest rate. So is 2023 the year of disinflation? I mean, FOMC has taken aggressive action during 2022. They are high rates like a lot. This is the first time I'm trading this kind of markets, and for me, this is unbelievable to stay at 5% interest rates. This action has returned inflation's expectations to what they think not in 2023, but I think for 2024 and 2025, they think this is going to come down to 2%. So they think this is restrictive enough in order for inflation to come down. But during 2023, actual inflation will likely follow inflation expectations to a lower level as the real economy normalizes. So this is good because they think during 2023 they are going to lower the inflation with these monetary policies, but they are not going to cut any rate. They are just going to wait at 5% terminal rate until inflation comes below that 5%. And this is super important to understand. So what are the markets doing? So they are happy with what Bullar says. But remember, this is This is in the context of a daily and 30-minute higher time frames buying these levels. So I think this is not surprising. The message on that speech from the Fed is good, but I don't think this is super good in order for us to break higher day. We need something else. We need Microsoft not to be 2% in the red, Tesla not to be 2% in the red. Apple is more or less flat as open. I was watching this consolidation, but this is a super choppy day. As you can see, we were basically V-shaped reversal and then consolidating just in this range that I had draw. And now we are pushing higher after the Fed Bullar speech. But I don't think we have economic data strong enough in order to push us higher. So what are we expecting? Well, tech stocks are all in the red except Meta and Apple, but barely in the green. Do sector funds tells us something? XLY in the red, everything is in the red, but look at this. XLU this is a defensive sector, utilities is minus 1%. And surprisingly, XLY and XLF, financials and consumer discretionary, are not feeling that much of a pain. Look at this. So maybe we can see something on the yields. Well, yields are pushing higher after FOMC minutes yesterday. Right now, the 2-year is at 4.4, 1.93% in the green, and the 10-year is pulling back a little bit. So let's see how the terminal rates are right now. We are still at 4.89. We reached this high is 4.93 on April. So this is part of the thing that as I was showing before earlier, some analysts think that 60%, 25 basis points, 40%, 50 basis points. And this is quite interesting because right now markets are pricing in what is expected and what Fed said. So 4.93, this is near the 5% terminal rate at April. I think this is better. We were at these low levels at 4.76. There's no way Fed is going to admit this. So markets were way lower on their expectations and now they are correcting higher after FOMC minutes. So at these levels, 4.95%. Look at this, September is 4.96. So markets are already aligned. Now they are aligned with what Fed's shared in the minutes. Until then, well, this is the only thing that I think is concerning. Markets are pricing in interest rate cut in December this year. 4.71 coming from 4.96 is more or less 25 basis points of interest rate cut in December. We will see. This is what they are pricing in right now. There's a whole year ahead of us, but this is the market's expectations, and this is quite interesting. Dollar is pushing higher. Look at this. Quite expecting, I think a lot of people is going cash or is going commodities. Crude oil is bouncing, not on this, but on gold. Look at this. We are pulling back from this huge move. I'm saying it again. A lot of analysts, I'm reading that gold is probably the best trade of the year. A lot of money on the defensive sectors are going to flow into gold instead of other commodities. And we will see. But I think now people is happy. Look at this. Since this, we are just spiking higher. This is super bullish move. And we will see if we reach 1,800 and more than that. Some analysts are expecting all-time highs or more than 2,000. We will see. Let's go back to the Nasdaq and do the final remarks. So as you can see, Fed Bullar provided some push to the markets, but I think there's not a lot of buyers, but we will see. Tomorrow, it's going to be super interesting because non-farm payrolls and unemployment. Non-farm payrolls we are expecting way lower. So payrolls need to go down. And unemployment, we are just on a consensus and forecast of flat. If this is true, if we get lower payrolls and the same unemployment rate, maybe we can have some kind of push higher. If unemployment comes lower, we are going to the moon, basically. Unemployment is super important for the Feds. We need to have higher unemployment. Higher unemployment and lower payrolls is going to be the perfect scenario for a Friday push up. What else? Non-manufacturing PMI. We are expecting lower readings. So if manufacturing is going lower, payrolls are going lower, and at the same time we see that unemployment is going higher, labor market is going to suffer, and this is good. That's the perfect scenario for tomorrow, and that's what I'm going to be watching. If we somehow follow these expectations, tomorrow is going to be a very bullish day. If that doesn't happen, well, you know, if unemployment comes lower, if unemployment is decreasing and we got higher payrolls, people with more money and with more employment, I mean, that's super bad. So prepare for that also. Have a plan always and adjust your expectations based on the data. 1 hour before the market open, we need to focus on unemployment and payrolls, and that's my plan. So what levels are we watching? I'm watching also the same levels. Let's go back to the 1 hour. I'm watching the same levels. I mean, these 11,000, this line and these two lines, these two supports. I mean, if we break down this, I don't think this is going to hold, but in between these two, 11,000 and 10,800 is going to be the key. If we get lower unemployments and higher payrolls, this is going to be bearish and I'm going to be short below these levels. And if we go above 11,000 with good economic data, prepare, because maybe, and this is my expectation, this is my opinion. Let me remove this. Okay. So I think we might see this. 11,400 is going to be on the table if we get good economic data. This is my plan. So going short below this support that we've been holding out, I think, 2 weeks. And if we break up 11,000, we might see 11,400. So these are my levels, and I'm going to be focusing on unemployment and payrolls, also manufacturing. So this is my plan for Friday. Remember, Fridays are, be careful with Fridays. Fridays are sometimes happens a lot of manipulations. Last day of the week, people take profits ahead of the weekend, and right now we are in a very uncertain moment. So be careful with that. As always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember, I put a lot of effort into these videos, so please support the channel, help me, and I'm going to continue providing you with useful information, economic data, fundamentals, and technical analysis for you. Remember, I upload new videos every single day for market forecasts, market updates, and market recaps. I appreciate your time. I hope you had an amazing trading day. Today was very choppy. Just look at the 1 minute. I mean, this is super hard to trade. This is a bell curve on the volume profile. So this is basic equilibrium. This is basically balance. And on range days, I'm not usually happy. I took some shorts here. I gave up some gains around here. So I just took my small profits today. And let's see for tomorrow. Tomorrow, big day, unemployment and payrolls. And remember, discipline and risk management are key for your success. Stay safe, everyone, and see you tomorrow.